Yo, Rafa, how are you, man?
Good. How are you doing?
Dan, I just want to call you Alpha Zeta. Or Alpha Zeta. Firstly, though, Danny,
Yes.
we're essentially at 73K. The all-time high set this morning was 73,666.
Yep.
Do you think we got all-time high in this interview? We're going to do 100K under over on this interview.
I'll take the under on that.
You take the under?
On 100K?
100K sets? No. That we set a new all-time high.
Oh, no, I'm not taking the under on that. Yeah, I think we'll do it.
Do you think we'll do 74?
Markets are open, aren't they?
You think we'll do 74K during this interview?
What are we at right now?
72,997.
No.
All right, I'll take the over.
Okay.
We
Deal.
bet we are relentless gamblers.
You guys should have been traders. I see you all the time betting on everything. So you're definitely traders.
I always lose though, so.
Well, that's not fair. You made a lot back. We had this one night we were playing pool in, where were we?
In Dallas.
In Dallas.
Fort Worth.
Danny had a few beers.
I'd had a lot of beers.
And we were playing pool and we got, what did we get to? You ended up owing me
I'm embarrassed to say.
It's about $3,000, right? And I was saying, look, we should stop. I kept saying all the way up, we should stop. But I was like, I'm going to collect the bet because if we don't, we can't ever bet again. And Danny pulled off the last double of quits. It went even.
Well,
Wasted.
It's the best game of pool I've ever played.
Yeah, so we bet all the time. No hedging.
Nope.
We're not pussies. We don't hedge bets. Had
the way to do it.
Nah, that's what Mike Green does.
I
It's not
know.
for us, man. Mate, good to finally record a pod with you, man.
Yeah.
Get you in person here at Swan. We got a important first question for you. Can you explain a 1-day rolling best fit geo-hyperbolic distribution?
Yeah, I can. How much time do we have?
Mate, listen, honestly, thank you for the nose ahead of this. Like sometimes we prep for interviews with nothing, right? We're like, what are we going to talk to them about? We maybe check their blog or see what interviews are done and that gets the notes. You sent us like a lot. But what percentage of it do you reckon you understood?
Of that thread, not very much. But I mean, yeah, 40%, 50%?
Really, that much?
No.
Dude.
We'll go through the basics then.
So we'll help people understand this and like get into this because essentially you've been kind of like working on this framework, right? You should explain that in a second.
Yep.
But we were like, how do you even get to the point where you know to do this kind of, what would you call it, statistical data mapping?
Yeah.
How do you even get to the point where you understand all of this?
Yeah, I still don't understand a lot of it. But there's always, I'm a trader by background. I worked at Wall Street my whole career, and all of this wasn't born like in a single tweet, right? This was an evolving process. And the whole Nakamoto portfolio theory was born of, first just portfolio allocation. How does Bitcoin fit in a portfolio, right? And that led to another question, which led to another question. And now we have a wider framework. And it starts simple. There are, of course, we start going deeper and deeper and deeper into like anything else. Like, if you start talking, about the cryptography with people that don't understand Bitcoin, it's going to go over their head, right? And you understand, the basics of cryptography, more than 90% of the people. Yeah, just by knowing Bitcoin, you do. So it may sound the same way. The first time you read something like this, it may sound foreign and very far, but, as you get deeper, you get it. You understand. It's not complex.
Well, give the listeners your background. And just, I mentioned you before we start, we always have to be kind of conscious of who's listening. In a bear market, you've got, well-versed Bitcoiners. They've been around, they understand a lot. We don't have to pull people back. Now we're at a period of time where we've got new people coming in. We're in a bull run. Our numbers are going back up. Our followers are going back up. So we know they're coming in. So we're going to have people who are maybe listening to their first show today. First ever What Bitcoin Did. And so there may be a few times where we like bring you back and say, you got to explain this a bit more simple. Yeah. But at the same time, I think this is a really good show to be making right now because we're really talking about investing with you. But give your background so people know who you are.
Yeah, so Brazilian by origin, was born and raised in Rio. Unfortunately in the 90s through hyperinflation. So that was really tough. I have a lot of stories from back in that day, but I think, I look back what primed me to be a Bitcoiner. That's definitely, big part of it. Like I saw money being debased literally on a daily basis.
How old, this is when you were a kid?
When I was a kid, yeah. I was, from my early Like from 10 years old to like 18, 19, I remember like, hyperinflation really, really accelerating. One of the main reasons why I actually ended up doing economics was because, of all the problems that I saw and all the suffering that I saw that it did to all the people in Brazil. And I actually want to see if I could understand why that happened and why, inflation really happened in Brazil. Because for us, for Brazilians, we couldn't understand, why do we have inflation? Why does money keep losing value overnight, right? And it's not only that, it's also the role of government in confiscation. Like one of the saddest moments I remember from, my early ages was my father watching the news at night and literally crying, right? And I think that was the first time I saw my father crying. I couldn't understand why, I was younger. And then I understood that, the government pretty much blocked, at that time, interest rates were high overnight because otherwise you would lose all your money. If money just sat in a checking account, you would lose your money. So everybody had their money on savings account, which earned interest. And the government literally overnight, strike of a pen, they said, tomorrow we're confiscating everybody's savings because the population is spending too much money and that's what's creating inflation.
Fucking liars.
Yeah.
So a bit like La Carolita, what happened in Argentina.
Yeah, exactly.
And what we saw in Lebanon.
Yeah, and this, it seems foreign, but as you just said, it keeps happening in different places. And to some extent, it's happening in the US right now.
It's a different sleight of hand.
It's a different, but it's happening, right?
Yeah.
If you steal $5, if you steal $500, steal $5,000, at what point it becomes to be a problem, right? I would say at the $5 already a problem, right? It's just going to become a bigger problem. So that, being born and raised in Brazil through that time, I think made me a little bit more primed to understand Bitcoin when it came out. Graduated in economics, as I said, in Brazil. Was also very lucky that the university that I went to Brazil, at that time, the guy that started the university was a former University of Chicago PhD. And he said it so that we always had Keynesian economics and Austrian school economics side by side.
Oh, you did?
Yeah.
See, that's so interesting because we've had a few people on who've studied economics. I did economics at A-level, so just like basics. But I always remember Keynesian economics.
Yeah, that's what everybody teaches.
But I don't remember at any time any challenge to it. It was just, this is economics.
Yep.
This is the way. This is the school of economics. This is what we live by. There was no introduction to Austrian economics. I didn't hear about Austrian economics till I got into Bitcoin. Probably Stefan Livera told me about it.
Yeah, and that's sad, Peter, because that's what happens with 95% of the people that study economics today, that go to very good schools, right? And they will learn Keynesian economics, right? And that the role of government is super important, that they need to print, right? Inflation is a good thing, and all lies. But that's the framework that they have. It will be very helpful to at least expose people to other areas of economic and other schools of thought, right?
How did that happen in the course you were studying? Were they separate modules? Did you debate them? Did you have some of it?
It was awesome because we had Macro 1, for example. We literally had two teachers. We had a teacher was a Keynesian teacher, and we had another was, an ultra-liberal. And funny thing, everybody thought that the ultra-liberal one was a crazy one because he kept saying we shouldn't have a central bank, right? And again, this back in the late 90s. That was crazy to say, right? And they would debate each other. Like they would, call each other names. And so for us, it was very enriching to see that and see that, yeah, maybe the truth is not on one side or the other, maybe somewhere in between, right? But just getting exposure that really gave me, we were reading Mises, we were reading Rothbard, all of these different things back then, yeah. So
and as students, did you find some students would be more towards the Keynesian side, some would be more toward the Austrian? Did you debate yourselves?
Vast majority were towards Keynesianism, yeah.
Wow.
Because that's what they see in the news every day. That's what, they hear from their parents. That's how people are primed to think about, right? So vast majority I came with that mindset, right? I came to the mindset, okay, so what should governments do to fix the problem, right? Instead of thinking that government is the problem because of too much printing, because of debasement of currency, too much debt, right? And all of the things that we know today. So that was, I think, when I look at my Bitcoiner journey, that was the second very important pillar that made me, I think, aware to Bitcoin. The third one was I always loved coding. Since an early age, I remember going with my mother to a supermarket and they had like at that time, all the coding magazines, they had code literally written on the magazines, and you would go in BASIC and type it up on your computer, right? And I remember being fascinated by that, and I started coding really early and always did, even when I took economics. So I think that was the third pillar that actually got me. I'm very lucky to have, looking back, to have experienced these three things, right, early in my age, so that when I saw Bitcoin, it was probably, I think, much easier for me to absorb, the potential of that, the risks also, but the potentials of it later in my
Were you a gold bug?
No, but interesting. The first time that I heard about Bitcoin, so continue, we'll get there. So 2000, so I graduated in Brazil, went to work for a hedge fund in Brazil, trading tech stocks at the time when the internet bubble was starting to, and so made a lot of money, lost a lot of money in the internet stocks bubble, right? Then in 2000, I always wanted to have international exposure. So 2001, I decided to apply to schools in the US, got into Yale, came to Yale in 2001, graduated in 2003. And then, when it came to the US, I thought, well, I'm just going to spend 2 years. I came with my wife, I'm going to spend 2 years here and then go back. Got a job, that initially was going to be in Brazil by the Safra family, which is one of the largest families, banking families in Brazil. And then last minute, they decided that, I was not going to São Paulo. They're going to keep me in New York. So I worked as a fixed income trader there for a couple of years. Then I went to work. Then I did a career at Wall Street, worked at Goldman, Merrill, Deutsche Bank, doing different things, mostly on the trading side, sales trading side, derivatives pricing. So, when you look at the models, as I said, they were born throughout that period of, learning more about models, Wall Street, pricing different things, right? So that's how I got to that.
It's funny because some Wall Street people still haven't got Bitcoin. We know some are starting to get it now. But once you do get Bitcoin, do you think having a Wall Street background gives you a massive advantage over, say, someone like me or Danny? Are you able to see things that we can't see with it?
I think in a sense it actually gives me a disadvantage.
Okay.
And proof of that is if you look at, the average Wall Street person, it's only starting to get Bitcoin now, right? Because they have a framework that it's very, very hard to break. I'll tell you a story, which is a story where I actually started to develop some of these models. So I had a very good friend, Brazilian friend, became my partner when I went back to Brazil. And, I kept telling him about Bitcoin for a long time. Like, you should buy some, it has a lot of money. He's like, should buy some, should stack some stats, buy a little bit. Couldn't get around, the basic things like, I don't know if there's really 21 million out there. I don't know, the typical questions, right? Governments are definitely going to ban this. I shouldn't be buying it. I'm going to lose all my money. And so I said, fine. Okay. So I tried it for a couple of years. So one day, there's a guy that invests in a lot of hedge funds out there, massive hedge fund investor, was early in some of the big names that you know out there, invested in Madoff as well, which again, that's a side story. But anyway, I got the Bitcoin returns and I printed in a sheet of paper that looked exactly like a hedge fund manager to him, showing like monthly returns and all the statistics, exactly like it was a hedge fund manager. And I put it in front of him like it was a fund sheet. And like, this is a fund, this is a hedge fund manager. I've invested with him. I want your thoughts on him. And he looked at the returns, he asked a couple of questions. I said, this is a macro trade. Think about, being a macro hedge fund. And he immediately looks at me, he's like, I want to buy something with this manager. I want to allocate with him. I know the returns are very volatile. I can sustain this volatility because overall, if you look long term, the returns are really, really good.
Well, he clearly loves a Ponzi if he was into me.
There you go. Maybe that's it.
Danny, we've got new listeners. It's not a Ponzi.
Buy my bag.
So he loved it. It's like, I want to invest with this guy. And then I told him, like, listen, this is a hedge fund manager in Japan. It's a Mr. Nakamoto. He's very seclusive. I don't think, his fund has been closed for a while. I don't think he can get in. And then he looked at me, he's like, these are Bitcoin returns. Like, yep. And said, well, listen, I think probably I'm overthinking all of this when I shouldn't, because I go invest in a hedge fund manager. I don't ask, a fraction of the questions that I'm asking you about Bitcoin. And if I did, the hedge fund manager would tell me just to go, pound sand, because they're not going to disclose what they're doing, what they're buying, right? And I'm okay with that. why shouldn't I be okay in investing in Bitcoin purely by looking at the returns, right? And nothing else. And I told him, yeah, but not only you get the returns, but you also get the first asset that it's completely transparent in everything that it does. You know exactly what the monetary policy is. You know, I'll show you in code where you're worried about the 21 million cap. I'll show you in code where the 21 million cap is, and that can't be changed. That can't be modified. It's a distributed network, you know, thousands and thousands of nodes around. So then he got it, and he's like, oh, now I get it. Now I understood. But you're answering your question. It takes, I think, for the traditional Wall Street person, there's some kind of block in their mind. I think it's because of the framework that they're used to that makes it much harder for them to really grok Bitcoin, you know, at the beginning. So,
well, I still think a lot of people it has a block on them. It's a weird thing. It's like there is this line that you have to get over, and we all have it. I mean, I don't know about you, Danny. I mean, the first time I heard about Bitcoin, I was very early. Like I read about it online, and I just paid no attention to it. Mm-hmm. And then in 2013, I was introduced to the Silk Road, and I bought Bitcoin, but I never looked at it. I had to go on this website called Local Bitcoins, and I had to like have a picture of me holding like the date or something, and then my money went into escrow, and I got my Bitcoin, and then I had to send it to these numbers, and then I would buy something on the Silk Road. But at no point did I look at Bitcoin, did I consider it as much. Didn't do any of that. And I didn't do any of that until really early 2017. And even then, I didn't fully grok it. I just thought, this is something to invest in. And everyone has that line to get over.
Yep.
And once you get over and you see it, like the Matrix, you know, when he's in the Matrix and you suddenly start seeing the code. Mm-hmm. You start to get it. You're like, oh, this all makes sense now. I'm in. But like everyone has it. I mean, you probably have a story, don't you?
Well, the first time I heard about it was like, I don't know when it was exactly, but it had been 2011, 2012, and I was DJing, and like people were buying drugs with it. I was like, that sounds sketchy as fuck. and then it was 2016, and I like you say, I didn't get it at first. I just bought it because it was going up. Like,
so you asked me if I was a gold bug, right?
Yeah.
So the first time I heard about Bitcoin was after 2009. So I was at Merrill in 2009, right? Okay. So I went through the collapse of Merrill. I can write a book just about that that period of time, which was insane. I remember like going on a Friday home and my boss just calling me back. It's like, come back to the bank because we're going to be sold this week. And Merrill, is broke and we have to find a solution. We have to reprice all your books. And that weekend was insane. That's an famous weekend where Merrill was sold to Bank of America, right? On a prearranged deal, and all of that happened. But after 2009, right, I already didn't have a lot of confidence in the system, and that my confidence level in the system just went down, like one order of magnitude, right? And I remember at the time there was this guy that I used to read a lot who was a gold bug, John Malden.
Okay.
And John Malden had, something that he called Thoughts from the Frontline. He published a newsletter. He published, I don't remember if it was every week or every month, but I love his newsletter because it started by going out and saying about the different things about the government, why government spending is a problem, right? And he was a gold bug. His solution initially was gold. And then back in 2000, I think this was 2015, 2016, he switched and it's like, listen, I've been talking about gold for all this time. There's this new thing that for me is digital gold, which is Bitcoin. And I have heard about Bitcoin before, like on the tech side, but never really paid attention to it because I thought, just like you, I thought, oh, this is funny internet money, gamers use for different things. I shouldn't be investing in this. But when he mentioned Bitcoin, then I looked at it, I think, a little bit more seriously. And I remember this was right before Mt. Gox happened. So the price was around like $1,000. And I look it up, my first reaction, oh, I missed the boat. This thing's already $1,000, Too late, I'm not gonna buy anything. And forgot about it. And I think a few months later, Mt. Gox happened. And the price went from like 1,000 to like 300. Mm-hmm. And then the trader on me kicked in. And I don't understand anything about this thing, but it just went from $1,000 to $300. I'm gonna buy a little bit just to see as a quick trade, right? And then that was the first time that I bought Bitcoin. And of course, it went from 300 to 600. I sold everything. I felt I was a genius, right? And it took me years to go back and, rebuy. So very similar to your story. I think everybody has to go through some sort of It's very rare the person that comes into Bitcoin and sees it as a monetary asset that they're going to put in their balance sheet, that they're going to hold for a long period of time. You usually have to go through through these cycles, because it takes time for the real understanding to kick in, right?
Yeah. I mean, I think it genuinely takes years to really get it.
Definitely.
I don't think when I was buying it in early 2017, I bought a few Bitcoin in early 2017. I didn't really know what I was buying, because if I had, I would have bought a lot more. I had the capital to do it. And I think, you never really fully get it. That's one thing.
Yeah, I still don't think I understand it.
Totally.
But I would say it's only been probably since about, I would say my best learning period was probably the start of the bull and the bear market, this most recent cycle. So from about 2020. And that's after 3 years of doing a podcast, when things started to click from the outside world into the Bitcoin world and vice versa, which, by the way, is why this interview is really important, because a lot of the conversations me and Danny are having now are about capital allocation, long-term investment, thinking about where we should be putting our sats, how we use them. So, but I do think it takes people a long time. And I also have got this theory that there's never a time when you buy Bitcoin and the time you're buying it, it seems cheap. So
no,
the
it's expensive.
The £80 Bitcoin I bought, my first one, I spent £80 for some numbers on the screen. I was like, this is expensive. Yep. And when I was buying it for £600 at the start of 2017, felt expensive. Even when it dropped from $69,000 to $15,500, it felt expensive. Yep. Today, every single Bitcoin purchase feels expensive, which I think is a good thing, by the way. But there's no point I'm like, it's cheap today.
Yeah, and we can talk a little bit about, how to price Bitcoin. And, how do you know if the price you're getting is expensive or cheap, right? And I think finally we're getting into somewhere where we can have an idea if it's cheap or not, right? And that's based on different scenarios, right? I say, okay, so what happens in an absolute scenario that Bitcoin becomes actually the monetary asset of the world, right? I personally think it's the best monetary fuel cell that was ever invented by a human being, right? Everything else deteriorates with time. Bitcoin doesn't deteriorate with time. So you do your work, I always get the example of my father. My father is a doctor, right? So I remember him working, saving a little bit of money at the end of the month, right? And then putting on checking account, on savings account, when he accumulated a little bit more, he would buy, a small apartment maybe, right, as a saving. But he always struggled. And then he had to get into stocks and bonds and where do I put my money? Because you're always swimming against the current, right? If you stay soft, if you just left the money sitting on his checking account, right, that he knew, again, by being a Brazilian, that value, maybe not overnight, maybe not in 1 year, but in 10 years, that money's pretty much gone. In 20 years, it's 100% gone for sure, right?
Well, listen, when I was just out in Buenos Aires, I was making my film. One of the people I interviewed said everybody is a financial director. Everybody. So we went to dinner. There were 6 of them, and they were all explaining about 30% of their time is where do they put their money? Planning. Yeah, financial planning. Where do I put my money? What do I buy? Do I buy dollars? How do I get those dollars? Do I buy stock? They just have to get rid of their pesos as quickly as possible.
Think about the economic impact of that, right? A doctor should be practicing seeing patients, right? And no, he's spending 20, 30% of his time investing and looking to investments, right? When he shouldn't be doing that.
Of course not.
If the proof of work that he did represented in the monetary assets that he built was not getting debased a long time, right? People need to do that, again, because they need to fight against the system. And they don't understand the reason why that happens, right? It's very simple, because you have somebody somewhere that can literally just he has to work, 24/7 to actually accumulate dollars or reais or whatever it is. Meanwhile, the government can just literally press a button and accumulate the same amount that he did without any work. So the ethics of Bitcoin is another thing that, when you look at, I think it's the first money that it's ethical money, right? It's completely ethical. There is no advantage. The US government wants to buy Bitcoin. They're going to have to buy Bitcoin. They're going to take it out of the hands of other hodlers, right? To actually accumulate it, unless they confiscate, which is a problem, right? But if they want to accumulate, by the traditional ways, they can mine like other miners. They can compete for the Bitcoins, but it's a fair system to get exposure to it.
Well,
right?
we even had the conversation this morning. So me and Danny were talking about that naturally with a podcast, we have sponsors. During a bull market, we have more. During a bear market, we have less. And during a bear market, we still have to pay the 6 people who work on the podcast. And I was saying to Danny this morning, I think we'll have a good 2 years now. And then what we should do is, like we did in the last bull market, we conserved a large part of the profits so we can make sure we get through a bear market. And Danny rightly said he can keep that in Bitcoin. I was like, no, because you know what? If it's a bear market, the price will be dropping, and maybe we should hedge with the pounds. But then I was thinking, hold on a second, if I hold those pounds over 2 years, I might lose 10 to 20%. Yep. So now we're having to become financial planners for the money we've worked so hard to earn. I mean,
it's a risk both ways, isn't it? It's a risk to not have the Bitcoin, and at some point in like the cycles, there's a risk to have the Bitcoin.
Yep. We work so hard. We spend time away from our families. We'll be here in the US for 11 days, doing 2 interviews a day. We get up before the interviews. We're planning them afterwards. We're doing other work. We work really hard for our money, and that money is getting stolen because it's being debased.
Yep.
And we're trying to think, how do we protect it? I mean, I remember when I was a kid, my parents had savings, and you would have building societies and banks offering interest rates 6-7%. They could put their money away, and it would grow in value. It doesn't exist anymore.
No.
It doesn't exist anywhere.
Yeah.
They give you that, whatever the fucking interest rates are now, they're 3-4%, but they're 4-5% under inflation.
Exactly. And that's true for other assets as well, right? People love real estate, right? It's the biggest asset in terms, I think, of monetary premium. And if you actually look at real estate, look in the US, look what has, use the Case-Shiller Index, which is an index that can measure price of real estate across different areas. And what you'll see is that most of the metropolitan areas, they have a very small premium to inflation. So it's like 2% above inflation in terms of price appreciation. Then you include that you have to pay maintenance, that you have to pay property taxes, that, there's something that always goes wrong that you need to fix. You're in the red. So people have this illusion that, real estate is this great store of value because they're locked in, right? So they're locked in for 20 years in an asset. Of course, it's going to go up. Did it keep up with inflation and protecting the purchasing power? Probably better than leaving the money in the bank account. Definitely better than leaving the money in the bank account. But there are other assets out there that probably have done better than real estate, and people just love real estate, right?
I haven't actually made any money on my houses net, by the way.
Have you not?
So I wouldn't share everything on here just because of not doxing myself. But Danny's aware of my the real estate ladder I've gone on. So my first house I did make some money on. Use that as the deposit for my next house, but in buying the next house, I had to pay stamp duty, so I lost a chunk of that. But then I got divorced.
But you also bought that in 2008 in the housing crisis, right?
I bought the top. I bought the top. I bought it probably a few days before you had your Merrill Lynch thing. Oh. So literally it was like I bought it in June 2016. And then and so 2008, and the crisis was July. Yeah. And so what happened is the value of the house dropped, but it came back. But then I got divorced, and then I had to give 70% of the value of the house to my ex-wife. But still, the house went up. And then when I bought my next house, I took a risk. And
did you take leverage to buy these houses? You got a mortgage or something?
Yeah, I got a mortgage. So in the next house I bought the biggest house I could afford with the longest mortgage, with the lowest interest rate and the lowest deposit for me, so I could hold as much Bitcoin as possible. That was my thesis, right? But the stamp duty wiped out any profits. So I'm probably about net neutral over, God, my first house 2008. What's that? 16 years. I'm probably about net neutral. The divorce didn't help.
Yeah. So 2 things
if I just bought Bitcoin, I'd be a billionaire.
Exactly. And that's what people don't realize, right? Again, they just look at price, point-to-point price. And the other thing is that actually people don't realize how volatile real estate can be because there's no mark to market, right? It's not like you have a ticker in front of your house, like you have the Bitcoin ticker that will say, okay, now Peter's house is up, 10%. And if you had the real market for your house on the day, I guarantee it would be extremely volatile, right? Yeah. It's raining a lot, maybe there is a flood that it's coming, your price is going to crash, right? oh, now it's great, and your neighbors are moving in, the development of then it go up significantly, right? And there's another thing, like there's massive distortions in real estate. People, if you look in the US, right, there's massive subsidies for you to buy real estate. You buy a mortgage, you can deduct the taxes of the mortgage or if your the interest or if your taxes, right? And that just creates more incentive for people to leverage up, to buy the asset, and to feel less, because the calculation that the typical American family will make in terms of real estate is like, how much can I afford every month? And then they will walk backwards to that. I say, okay, I have excess cash of $1,000 every month. I can afford $1,000 mortgage. They're not worried about the interest rate they're paying. They're not worried about that price house that they are paying for, right? And again, they're completely dissociated from any valuation, which if price go up significantly, as long as they can afford that house, they don't care, right? Now we're heading into a situation that, again, prices are really, really stretched up, right? Interest rates are high. And that's going to create all series of different problems out there. And again, real estate, ultimately, so I say it's a Frankenstein asset because it shouldn't be used to store value. It should be used for it to live, and should be a nice house for the way that it was. And people should save money whenever they have enough money. They go out and buy a house, right, with the money that they can. But it became this Frankenstein asset where people just put their capital in there with Airbnbs and all of that, to store value in the long term, because they don't have an alternative. They're not, everybody's, in their own mind, everybody's rational, right? And it is a rational decision because they know if they just leave the assets standing in their checking account, it's going to be debased, right? So this is probably, and it's something that people understand. Everybody needs a house to live.
But do you think so? I actually don't agree that I only think in, say, Western, first world countries, UK, Europe, Australia, I only think people like our generation, my generation, only recently came to really understand inflation. I think before the current crisis, I don't think anyone really did.
I still think people don't.
Well, some people don't, but I think people have realized now, like when you have 2% inflation, I just think of it as an insidious, like slow theft that you don't really notice. It's like if you had
$5 robbery.
It's the $5 robbery. It's almost like if you had like a piggy bank and your brother goes in and he's stealing a couple of quid a day. You don't notice it because the pile of cash looks around the same. I don't think people generally did. Now they do because the prices, they've seen prices go up so much so quickly. So I think our generation are just starting to get that, but they certainly don't understand it like you do, or my friends in Buenos Aires or Lebanon, because they haven't been through massive inflation.
I think there's like a couple generation gap in that as well, because my parents' generation do, because they lived through the 70s where there was really high inflation, but there was no real reason for anyone else to understand it, anyone who came kind of after that.
Yeah.
So
I don't think people generally have done. I think they do now, but I still don't think inflation has been bad enough in the UK for enough people to be looking for something alternative. I always refer to my friends in the pub, right? They all know what I do. Are any of them, are my good friends texting me about Bitcoin? No, I've got the odd random person, but my good group of friends, nobody is. And even if we're in the pub, none of them are saying, you know what, I need an alternative for this inflation. What's happened is their mortgage rates have gone up a bit, fuel's gone up a bit, and their shopping costs have gone up a bit, and they've just rode through it. But they're not financially planning an alternative.
Yeah. I think people are driven by two different motives, right? It's fear and greed. So far, if you look at the developed countries, right, it was in terms of real estate, it was a lot of greed. People know that they put the assets there, and they know that prices are going to go up in real estate in their mind, right? It's starting to, while in places like Brazil, Argentina, Venezuela, it's more on the fear side, because we know that if it's not there, it's somewhere else, right? That's going to be debased. It doesn't matter. It leads to a lot of people going to one asset class, a $320 trillion asset class, right? We're celebrating that we just saw $1 billion going to ETFs, in one day. It's nothing. It's a drop in a massive ocean of liquidity in the world, right? And my point is that all this liquidity and it's not only real estate, you're talking about, all the way from Japanese stocks in the 80s, right? Internet stocks, Then we had all kinds of different bubbles, real estate bubble, and all of that. It's because we have excess liquidity in the system that needs to go somewhere. And if you have an asset that can capture even a small percentage of this massive ocean of liquidity, even with a very small probability in your mind, and even that it doesn't happen today, it happens in 10, 20 years, that asset should be valued much more than where it is right now, right? And this is why I come to Bitcoin. I always look at the numbers and I'm like, this is by far the best asymmetric bet that you can make, because even in very low probability scenarios, if it captures the monetary premium of all these assets, right, the upside potential, we're not talking about 10x. It could be 100x in a very quick period of time if it really captures the monetary premium of these assets, right?
Can Bitcoin have a monetary premium?
That's a good question.
We were debating that last night. I think there's an opportunity now, and the opportunity is it's the risk that we take of this asymmetric bet, the gap in knowledge between us and everyone else. So that's like the opportunity for us. But we were asking, because we were looking in your files you sent us, that you talked about the monetary premium on gold and real estate and stocks, etc. And we're like, well, can Bitcoin? And we thought, one of the conclusions I came to is that Bitcoin can't have a monetary premium.
It may.
Oh, it may. Because I came to the conclusion that perhaps it doesn't, because it's a pure free market.
Yeah. But we always confuse when you look at valuation models, right? Yeah. Let's say we all come to an agreement that the fair value of Bitcoin tomorrow, for some reason, we open up a door, we can always sneak in the future and know that Bitcoin is going to be priced at $600,000 1 month from now, right? And we know that's for certain, right? What's going to happen is that overnight, you're going to have such a massive flow to come into Bitcoin that who knows what's going to happen to price, right? And price may go above the 600,000 because, there's only a few of us that are going to be willing to sell. And very quickly, a massive market order comes in to buy Bitcoin, and the price could go even higher than that 600,000. You also have players that come in and say, yeah, I saw that, 1 month from now it's at 600,000, but if 1 month from now it's 600,000, it probably means that it's capturing a lot of monetary premium. It's not going to stop at 600,000. It's going to probably go higher. So I'm willing to pay more for that, right? So as economic participants start to, on their mind, create the probability and see the fair value on their minds, you could have a monetary premium on Bitcoin in the short term because of flows, right? It's a very narrow door that a lot of people are going to try to get out at the same time.
How do you calculate the premium, though? So, if you're looking at real estate, how do you calculate the premium?
Yeah, so I actually wrote a model about that, right? And we were talking about that. So there are a series of frameworks that are created on a website. It's called nakamotoportfolio.com. And one of these frameworks is the Schrodinger coin model, which calculates the monetary premium, what would happen in a scenario that the monetary premium would be captured. So let me walk very quickly to what the model is. First, let me talk about the Schrodinger cat experiment, which is a fun, experiment in quantum mechanics, which basically it's a very simple experiment that, I think gives people some way to understand how quantum mechanics is different than everything else. Imagine a scenario, you have a box, the box is completely sealed, you can see inside of the box, and then you have a cat inside of the box, right? And also with the cat, there is a vial of poison that that 50% of the time, that vial breaks and the cat is dead. 50% of the times it doesn't break and the cat is alive, right? So the question is, with the box sealed and you look at the box, and you can know if the cat is dead or alive. Is the dead cat or alive? And if you go through the mechanics of quantum mechanics, the answer is the cat is both dead and alive at the same time, right? And, which is the most interesting thing, the fact that you open the box and you observe the cat actually may drive the outcome, which is mind-boggling, right, in quantum mechanics. So we're not going to get too much into that.
I know. Do you remember we had the quantum guy in Bedford?
Yeah.
And he was saying when they were running the experiments, you can't look at it because it changes the result.
Yeah, it breaks it.
And I was like, I don't understand
that
this.
That still doesn't make sense.
Yeah, I don't understand this. What do you mean? And he was like, so we run these experiments, but we can't look at the experiment because it changes.
The observer will influence the result.
Yeah, and I'm like, what do you want about?
Yeah. I mean, we won't go there. But my point is, I remember back in November, like a year and a half ago, watching it, coincidentally, at the same day, I watched I think it was the first time that Michael Saylor was talking about Bitcoin as property. And on that video, he said, okay, so here's a real estate and Bitcoin is going to, be the best property that we ever had, right? And talking absolutes about that. Like, this is going to happen. And then I flipped to Bitcoin Twitter and somebody had just posted something about Dan Penna. You remember Dan Penna, the crazy guy? Oh, Bitcoin is going to zero. Bitcoin is going to zero. Always, it's also talking absolutes, right? And that immediately got me. It's like, oh, this is the cat that it's alive and the cat that is dead, right? So Bitcoin is the cat that it's either going to be eat away all the monetary premium of the world, or it's going to be dead, right? And it's going to be worthless. The answer is not one or the other. It's somewhere in between, right? And I love probabilities. I love probabilities since I was very young, right? And I'm like, okay, so let's put probabilities to these scenarios, right? Let's first understand the scenarios, and then we'll put probabilities to them. And then the third variable is, this is not, the monetary premium is not going to be captured overnight. It's going to take some time. It may take 5 years, 10 years. So let's put another variable, which is time. So let's assume it happens in 10 years, and then we'll bring it to present value. And what that will do is we'll give us an idea of the ranges of price that Bitcoin could be. So let's use real estate as an example, right? Real estate, $320 trillion market out there, right? And think for an example, and again, people can go to the website and can change the assumptions. I actually created an app that you can slide up and down the probabilities, and you can change all of these variables for all different asset classes. You can include other asset classes. It'll be super flexible. So if in real estate, say, okay, 50% of the price of the 320 trillion, let's assume 50% of that amount is because monetary premium. So people that bought real estate, not because they're going to live in it, but because they either are a fund that want to get exposure, or somebody that wants to have an Airbnb, somebody that just has assets in excess liquidity that needs to go somewhere else, right? So that's the first variable. Assume again for a second that 50% is the right number. The second one is just say, okay, but it's not in all, if we think about a multiverse, right, several universes, it's not in all these universes where Bitcoin is going to capture the monetary premium. It's only in a few, right? So you put probability, okay, I think that maybe, 10% of the universes out there, the possible scenarios out there, Bitcoin is going to capture this monetary premium, right? So you apply that as well. And then the third one is say, okay, so let's assume for a second that this is going to happen in 5 years, 10 years, and you apply a discount rate, you bring that to present value, and what you're getting, fundamentally what you're saying is like, if I believe that Bitcoin can capture with a small probability the monetary premium, which I assume is X of these assets in 5, 10 years, 15 years, this is the price that Bitcoin should be today. Not the price that it's going to be in the future, the price it should be today, right? That's what the model does. So the model does that for stocks, for bonds, for real estate, for art, silver, gold. And again, you can add other, I would argue there are other assets that are not included. There's cattle, there's like all different kinds of commodities that people use to store value, even currency, right? That should be in there as well. So this is a conservative measure. And then I have different scenarios there. I say, okay, each of these, let's keep the funny thing here. I do the opposite as well. So in these conversations with the TradFi guys, right, I'll do the opposite most times. I'll say, okay, so I understand you think Bitcoin is worthless and it's not, but is it 100% of the times? What's the probability that you think that Bitcoin is going to succeed? And they will give me a probability. I say, I think 10% is going to succeed, right? Like, okay, so do you think, if you look at real estate, let's switch topics, real estate, right? How much of the value of real estate out there, you think it's just monetization because people buy as a second home? So they say, I don't know, 50, 60%. And I plug these numbers in. Most of the times when I do that, it turns out that they're more bullish than I am. And I go back and I say, listen, with the numbers that you just gave me, Bitcoin should be worth today, right? This amount. And they first reaction is that the math is wrong. They're like, no, the math calculator, you can do it in your iPhone. Like it's pure multiplication. There's nothing complex about it. And they do the math and you're like, damn, you're right. Even in small probability scenarios, if Bitcoin does capture this monetary premium of all these assets, right, the upside is significant. This all started.
Hold on, what does if it works mean? So when you say to somebody, if Bitcoin works, you ask them the probability.
Yeah, it had work already. Works is not the...
Well, this conversation we had yesterday with Drew, I was like, people say, well, if Bitcoin, does work. I'm like, it has work. I think we're there.
Yeah, but I
don't see a failure case for Bitcoin now. Like, obviously there's remote chances, like catastrophic, but I don't see a failure case for Bitcoin now.
but the knowledge is not widely distributed.
No,
So
of course.
you know that, Danny knows that, I know that. Vast majority of people still think Bitcoin is worth zero, right, on their mind, because you're not making this calculation, and you're not seeing that the total addressable market for Bitcoin is not, stocks or bond. They do compare Bitcoin to Apple, for example, right? I hate when I see those comparisons because Bitcoin's not Apple, right? Bitcoin is the base layer where Apple is built, right? It's the monetary base for everything else, right? You should look at all the monetary assets of the world. People still not there. They still don't understand that. They will compare with other things like, how come Bitcoin can be worth more than company A, B, or C, right? And you can, again, because of all these things. I think as people start to realize that the total addressable market for Bitcoin is orders of magnitude of they understand, we're going to see this getting closer and closer to what I think is the fair value of Bitcoin, right?
So if someone came to you and said, what is Bitcoin? Because we did an interview recently with Quoth the Raven, and he said, how do you explain Bitcoin? I started explaining, he said, yeah, you've already lost me, you failed. And so I thought a lot about that afterwards. And so one of the things I'm thinking about is, there's two ways to explain Bitcoin. There's explain what Bitcoin is now, and then you can explain what Bitcoin end case is, right?
Yep.
And end state. And I think they're actually two different things.
100%.
And it's where do you start, Because a lot of the criticisms I think someone like Peter Schiff has is that he's discrediting Bitcoin's end state based on what's happening today. So he's measuring what's happening today.
Yep.
But using that as it's at its end state. And I think it's a bit like when somebody said you can't go from 0 to a trillion in a straight line. Bitcoin has to be volatile. So how do you explain it? If someone new was coming to you and you said, what is Bitcoin? What is it? What's its role? What's its purpose? Why should I buy it?
As I said, I would say it's the best monetary fuel cell that was ever invented, right? So this is the asset that has a higher probability of storing your proof of work, your labor for the long time, right? For the long period of time. It's not going to do a good job overnight. Yeah, volatility is here, and we can talk about volatility because I think volatility is a feature, not a bug, right? But if you need to store your assets for a long period of time, in my view, this is the asset that has the best probability of doing better than anything else out there, right? Because other assets, either they've been monetized already, right? So when you're buying real estate, you're competing with all the capital that flew into real estate for the last 2 decades, 3 decades, right? Because they didn't have anywhere to go, and you're probably buying it closer to the top than you were. So the monetary premium, the monetization of these assets happened already. Bitcoin, it hasn't happened. So answering your question of where should this go, right? So Hal Finney actually wrote about it, which is mind-boggling, right? He wrote about this in one of the early forums.
When he said about the 10 million Bitcoin.
$10 million Bitcoin.
Yeah.
And he went through if Bitcoin captures the monetary premium, or he doesn't say monetary premium, but he captures the value of these markets, this is where Bitcoin should be. So my bull case is similar to that. I just don't think that it happens overnight. If you go to Nakamoto Portfolio website and you go to the Schrodinger model, there are 3 buttons that you can press there. There are 3 different scenarios. So you have the bearish scenario, the base scenario, the bullish scenario. So the bearish scenario is a price of Bitcoin today of $160,000 today. Okay. So it's already undervalued by 2x in the bearish scenario, right? And again, these are my scenarios. People can play around with the settings there. Mm-hmm. My base scenario is Bitcoin should be worth today $620,000.
It should already be there.
Should already be there. In 20 years time, it will go to $3 million. That's my base scenario. Then the bullish scenario is that in 15 years' time, it goes to close to $8 million, and today should be worth $2 million. And then I have a button here, which is the hyper-Bitcoinization button.
Okay, so tell me that one.
You click on that one, so you tell you that Bitcoin ultimately in 15 years will go to $24 million, which capturing the monetary premium of pretty much all of these assets with high probability. And today, if you believe that scenario, so if you're a Bitcoin maxi right now that really believes that hyper-Bitcoinization is coming, anywhere between now and the next 15 years, Bitcoin for you today should be worth close to $6 million and not $72,000, $73,000 as we're buying. So good luck for people that understand this, good luck taking the Bitcoin out of their hands. You're not going to take it because you're nowhere close to the price that is the fair selling price for them in terms of Bitcoin.
So why are we not at that price then?
Yeah, so this is a great question. This explains volatility as well, right? People, and Peter Schiff loves this, like, oh, this can be a store of value, it's super volatile, right?
Well, even, who said it the other day? Was it Sorkin?
I don't know. What did he say?
Did he say...
yeah, he did say something like that.
He said it was, it can't be a store of value. Did he say if it's volatile, it keeps going up? No, it has to be stable. I think he said it can't be a store of value if it's not stable.
Yeah, that's bullshit. I mean, at the process of capturing the monetary premium, first of all, it doesn't happen overnight. Second, the knowledge, as we discussed, it's not evenly distributed. So gradually people are going to know about that. And also, even the people that know about it, we all oscillate between our bull and bear case during bull and bear markets, right? Bull market comes in and everybody's saying, oh no, hyper-Bitcoinization is here, the cycles are dead, right? Bitcoin is going to the moon, right? Forget about it, we're never going to have cycles again. We've seen that a couple of times, right? And in the bear market, it's the same thing. You have people saying, no, this is going to drop another 20%, 30% from here, right? And it's usually
going to 5,000.
Going to 5,000, exactly right. And that creates volatility because people are reassessing. They don't know, but intuitively in their minds, in all of our minds, we're reassessing the probabilities of Bitcoin actually succeeding based on of the recent past of what we're seeing, right? So as that becomes more and more distributed, and more people come in, and more people see that that's happening, and more people realize that the total addressable market of Bitcoin, it's not a stock, it's not gold, it's actually much bigger than all of that, right? Then if you move, and you see, if you move the probabilities here by a little bit, by a couple of percentages, the differences in price are massive because you're talking about very high potential value, right? The hundreds of trillions of dollars. And even with a small probability, given where we are right now at $1.5 trillion, right? I mean, the potential is massive. As I said, it's a drop in the ocean of liquidity that you have of all these assets out there that Bitcoin has a probability of capturing. Do I think that probability is 100%? Of course not, right? Do I think it's zero? Of course not. Is it somewhere in between? It's definitely. And people, again, can play and see, given their intuition about probability, where price of Bitcoin should be. And I guarantee you, most people get shocked when they see where the price should be.
Well, the funny thing is I don't even bother with probability now. I'm binary. It either captures everything or dies.
Zero. Yeah.
There's no in between.
Yeah.
And my view is that it's more likely.
But the in between is a framework of thinking, right? So it's the same thing when you do binary trees pricing. Do you know what binary trees are? Very simple. Okay. It's one of the most simplest ways of pricing any kind of asset out there. You basically believe that, today you start here, and then in one day, the price is going to be stock. Stock today is at 100. Tomorrow you wake up, and it's either going to be 110 or 90, right? And the next day you wake up, and the 110 is either goes to 120, right? So by thinking about these two scenarios, then, which both of them can happen, you just put probabilities to them. So it's not in between. You just say, I think, Bitcoin goes to zero. Is there a probability Bitcoin goes to zero in your mind?
No.
Zero. Zero.
I mean, I could come up with some kind of global regulatory
Peter, I have
crackdown.
news for you.
Yeah.
You don't need to worry about allocating your assets anywhere else because in your mind, you already think that Bitcoin is the best asset out there, right?
Yeah.
And you shouldn't be, which I'm in the same camp, right? I don't think it should be worsifying into other things.
Okay, it's non-zero because there could be a global regulatory crackdown. But even then, I think there'll be safe havens. But even with those safe havens, the price is going to crash.
There's game theory because one country bans, the other may actually say, no, you can come here. Yeah.
There could be world war, and miners could be targeted, and something could happen with, I don't know, the difficulty adjustment, which means blocks take forever and it just becomes useless. There's lots of scenarios where, but I think they're far outside. So there's scenarios where I'm whatever. I don't care. I'm there. I'm literally there to the point now whereby my only consideration for fiat is my business is run on fiat, my personal life runs on fiat. I have to have some. Yep. And also I just kind of want to balance the cycles if they still exist, because, I have to, I could put all my money constantly in Bitcoin, but there are times where I'm not going to. So, say we, at the end of 2025 and we're at, say, 500,000 of Bitcoin, I'm probably not going to be buying Bitcoin then. I'm just going to be holding fiat. It's either dry powder if we drop, or it's just stuff I just spend on fiat, right?
This is a great point because a lot of people start in the wrong perspective in Bitcoin. They're like, Bitcoin is not a medium of exchange, and because of that, it has failed.
Right.
But historically, getting to medium of exchange only happens way after it was a store of value.
Yeah.
Look at gold. Gold in China, right? When we talk about like the early days of fiat paper, right? Fiat was born because of gold, right? Gold has already failed because fiat, again, was born out of it. And the main reason was, you had all these coins and people were moving the coins around. Like, no, I can't be moving coins around. I get robbed, and then it's just heavy, it's clunky. So they put it somewhere in a vault, in a bank. And then the government started giving you pieces of things. No, here it is, Peter. You have a deposit of 10 gold coins with us, right?
Yeah.
And then you started trading that. Like, there's no point in you, Peter. Here I have 10 coins there. I didn't give you the coins. Here's the deposit. It can go there, right? And that's how paper was born, and that's how people started trading that because it was much simpler than just getting the gold across, right? So gold has failed already. Not today, but like in the China, I forgot in which dynasty, but a long time ago it has failed, right? We just didn't realize because we didn't have better alternative. We are eventually going to have digital ways to get Bitcoin across. They're going to be much simpler, and that's going to happen. And even if that doesn't happen, even in Brazil in the 90s, we still use the Brazilian real, the cruzado or whatever it was called. We use the same. We know the currency was a shit coin. We knew that it was going to go down. We knew that we couldn't store it. But for day-to-day things, I don't care because, you get the money in the bank and then go give it to somebody else, and that's it. So this medium of exchange is the last thing to die. And I think we're very, very far away from that. That's a multi-decade, endpoint. And even if we don't get there, it doesn't mean anything about Bitcoin. Bitcoin could capture, again, all the monetary premium that I just said without even becoming a medium of exchange between them.
Well, is it Gresham's law? Is it Gresham's law where you use the shit money first?
Yeah, exactly.
The good money falls out.
Money, yeah.
So just look, a great example. When I was in Lebanon, everybody wanted dollars, right? You pay with dollars, but they still had is it the lira or the pound? I can't remember. But anything that was like under $10 in change, they would give you in the local currency. So they're keeping your dollars and giving you that shit coin, and everyone's trying to get rid of it. Like I naturally, and I think because we run these businesses as Bitcoin businesses as well as fiat businesses, we spend the fiat. We only keep as much fiat in the account for 3 months cash flow, right? Everything else goes into Bitcoin.
Yep.
And we spend the fiat. The only time we spend the Bitcoin is people who accept Bitcoin, who only want Bitcoin, and we have to pay them with Bitcoin. And each time I regret it. It's like secret. I'm like, I'm giving them my Bitcoin. It's like isn't this Gresham's law in play right now?
Yeah. And I think, there's a lot of debate in the Bitcoin community when you talk about Lightning, for example, or Liquid, or all these other side chains, right? Or second layers, right? A lot of people don't like it because they say, well, this is not Bitcoin. Which is true. You should always prefer to have, the best thing to do is to have your own Bitcoin, your own custody, on chain. But for small amounts, if I'm going to Starbucks to buy a coffee, I can use Lightning. I can put, 10,000 sats in my app here. And if I lose my phone, not the end of the world, the same way that, I put $100 in my wallet. And if I lose the wallet, I'm going to be sad that I lost $100, but it's not existential, right? So I think we're going to get to, second layers that are actually very good, very liquid, very reliable, much more reliable than, using your credit card today. And again, it's not going to be as good as Bitcoin, but it's much better than what we have today, which is, again, this system that use credit cards and people just get over leveraged, right? And which doesn't make any sense.
So I'm guessing with you, you're a bit like me. You're pretty certain that where we're headed, right? And so your headspace now it feels like from everything we've read of yours and watched of yours when we were planning this interview, it feels like you're starting to think about what that new world is, what that world is on a Bitcoin standard, post hyper Bitcoinization, where we've repriced. Actually, to be fair, I think there's the two worlds can live side by side. I'm essentially on a Bitcoin standard in that my major financial decisions, I think of them through the Bitcoin lens, like buying a house or whatever. How I run my business, I think of it through Bitcoin, right? But I can live on a Bitcoin standard while Danny maybe lives on an Australian dollar standard, right? So they can live side by side.
I don't, just for the record.
You haven't got any Bitcoin, have you? But I feel like you've kind of left that old world behind. You know it's there. You're starting to think fully about what this new world is and
100%.
how it works. Yeah.
Yeah.
And so I guess my real question for you is that how, what was the start of this framework then? Because you talk about this framework for thinking about allocation, and we went through all of it. Me and Danny went through all of it, all these different considerations. And what was our final question? Do you not remember what we said?
I don't remember what it was.
Well, if we're right, why would, I think if we're right, is it any other allocation than 100% Bitcoin?
Yeah, there is. So there are two different things we can unpack here.
I literally just I just wrapped all the questions into one. Into one.
Yeah, then there are a bunch of things to unpack here. So let me start with the allocation piece, and then remind me to talk about where the financial system is going. That's a big one also.
With this allocation, by the way, have some consideration for. We might have some people who've got zero allocation right now.
Yeah.
And they might be thinking,
It's the wrong answer.
Yeah. Choose rich. But let's consider what they should be thinking about. And let's think of, normal person, middle class, okay salary, small amount of disposable income every month, probably got some good amount of money in their mortgage, maybe some savings, but they're looking and going, shit, I've got no pension. I don't know how I'm going to retire. Because I think there is this, there's going to be a bunch of people who cannot retire at 65 because I think especially in the UK, I know amongst my group of friends, a lot of people don't have pensions. And the pensions they do have are not going to give them the lifestyle they're living today.
Yep,
totally.
So let's think of those kind of people.
Yeah. So let's talk about, separate the pensions from an individual investor. Mm-hmm. So the other thing we have on Nakamoto portfolio, this, by the way, 100% free, 100% open source. People can modify the code, can look into different things, can do whatever they want.
We'll make sure it's in the show notes.
The traditional portfolio for typical US investors, what they call the 60-40 portfolio. So they put 60% in stocks, 40% in bonds, right? That has been the same thing since the 50s, since Markowitz wrote, the modern portfolio theory, which is not modern anymore, but it's still the framework that you go to your financial advisor at Merrill Lynch, at Goldman Sachs. This is what they use. They use a model from the 50s, right, to create asset allocation. So what I did is...
Hold on. Sorry to interrupt. Is that portfolio allocation ultimately a Ponzi?
I don't think it's a Ponzi. I just think people don't understand what's behind it. And the assumptions really matter. And they will use, which is a critic, I'll use it for Bitcoin, I'll do the same thing. And then I get criticized for that, which is the fact that it's all based on historical returns and historical correlations to other assets. So everything that you're looking is looking to the back mirror, right?
But does that portfolio allocation only work with inflation?
No, I would say it works outside of inflation, even if we don't have inflation, right? Because assets go up for different reasons. One of them, think about, for example, Apple, right? Mm. Apple didn't go up because of inflation; it went up because of innovation, right?
I'm more on the bond side.
Yeah.
But the bond side have driven the requirement to print more money, which have driven the increased liquidity, which has driven the premium on stocks.
Rob Hamilton put out a tweet today. I'm going to read it because it's interesting. He said, a 60-40 portfolio is a psyop to be a bag holder of government debt. And I can't help but think that that's not only right, but it's why portfolio construction no longer works.
Yeah, I mean, there's a huge part of that.
I didn't even see that tweet, but it feels like what I've just said.
Yeah, there's a huge part of that. 40% in bonds is not the right answer to most families out there. And they think the bond piece, it's the safe one, there's no volatility. They just saw that in the recent history, with interest rates going from 0 to 5%, what happens if you have a 30-year bond? You have a massive loss in your portfolio, right? Yeah. And pensions are screwed exactly because of that, because they mark to market a lot of those bonds that they bought in the last few decades. They're worth, 70, 60, 50 cents in the dollar from back then, right? And they're not. They're not marking to market because they're just saying, I don't need to sell, or just wait until, it matures, and then, get 100 back, the principal back, and, get some coupon, for all. But the reality is if they needed to sell those bonds today, they'd be marked down, right? So the opportunity cost is higher. So the 60/40 portfolio, right? If you look, go to the Nakamoto portfolio and you see like in the last 9 years, and a 60/40 portfolio has returned 112% in total. So around 8% annualized return with a annualized volatility of around 11%, right? Fairly volatile, if you ask me, talking about an asset that gives you 8% annualized with 11% volatility. So what you can do in Nakamoto portfolio is say, okay, what happens if I add 1%, 2%, 5%, 10% Bitcoin allocation? You can simulate different allocations to your portfolio, right? And you see, I'll give you an example. So on a 60/40 portfolio, if you added 5% Bitcoin to that portfolio, that 8% goes to 14%. So you already had significant pickup on your returns, only with a 5% allocation. The other 95 are untouched, right? Your volatility went up, of course. It went from 11 to 11.9%. There's a metric that we use called the Sharpe ratio, which is basically just adjusting your return to your volatility. The higher the Sharpe ratio, the better. It means that you have more units of return per units of volatility, right? So the Sharpe ratio of your original portfolio was 0.6. With a 5% of Bitcoin allocation goes to 1.05. To give you an idea how good 1.05 is for Sharpe ratio, Warren Buffett doesn't have a 1.05 Sharpe ratio throughout his career, right? So
that's great.
This is really, really good. And then, of course, I showed this to TradFi people. The first thing, by the way, the other thing I forgot to say, this is being rebalanced quarterly. What that means is that I'm selling Bitcoin quarterly to go back to the 5% allocation, right? If you don't rebalance, that number just, of course, Bitcoin becomes your portfolio because that 5%, with a long period of time, it becomes 100% of your portfolio,
That's
right?
exactly what's happened to me over 3 cycles.
Yeah, exactly. So if you buy Bitcoin, you shouldn't rebalance. You buy an amount that it's going to be okay for you to hold for a long period of time. You are going to have all the incentive in the world to rebalance because, it's going to double in size as I did. And you're like, oh, I'm a genius. I'm just going to sell some of it. I'm going to, recoup my investment. A lot of people do that, right? But it's the worst thing you can do because, again, if we're right on the probabilities of the capturing of the monetary premium, Bitcoin is going where it could go,
you want the compound growth.
You absolutely want the compound growth, right? So for individuals, right, that have the 60/40, and then there's one thing I do here is that you can start just by saying, forget the 60/40. Let's just throw 3 assets in the bucket. Let's throw stocks, bonds, and Bitcoin. And let's optimize. Let's find what allocation between the 3 of those would get me the highest Sharpe ratio, the highest risk-adjusted return that I can, right? And the Nakamoto portfolio will do that for you. So the answer with that is a 20% Bitcoin allocation is the allocation that optimizes.
What's the Sharpe ratio with that?
So the Sharpe ratio of that, I don't have it here, but it's high. It's very high. And of course, like this is all back tested. It's all looking at past returns, right? But I'm using the same tools that, again, you go talk to a CIO of Goldman. This is what they use to create portfolios of their clients, right?
Do you think now with the ETFs, this is changing?
100%.
Okay.
Yeah.
So what's going on there? Because the BlackRock flows are insane. But even the Van Eck ones went up this week. I think Bitwise is doing well.
Yep.
Fidelity's doing these flows are insane. Do you think something's clicked? And where is that clicked? Is that clicked with the financial advisors and they're just putting that in front of their clients?
Yeah. Financial advice, for them, it's much easier now. The UX is just had, massive upgrade because what they had before, imagine you didn't have incentives. Your financial advisor, I've seen this. Like I have a lot of financial advisors or friends, that have been asked to buy their clients to buy Bitcoin, right? And their answer up until now is like, I can't talk about it. Like most of them, they couldn't even talk about it, right? And they saw their clients withdraw assets from Merrill, Goldman, all the places and open an account, at Swan and Coinbase or whatever it was to buy Bitcoin, right? And they couldn't do anything about it, right? Because the companies literally didn't let them talk about Bitcoin. And even they could talk about it, they're not capturing anything. They get fees on funds that they sell, they get fees on stocks that they sell, they get fees on bonds that they sell. They would get zero fees on Bitcoin, right? Now they have an asset that it's plug and play. They literally can go and say, okay, you've asked me about Bitcoin. Now here's an alternative. You can just, let's put 1% of your portfolio in Bitcoin. You can buy the BlackRock ETF, right? And here's it is. It's transparent. It's in your statement. It's another line in your statement. So that same asset allocation, the portfolio review that they do for their clients every quarter, right? It's just much simpler because it's aligned. It's already, the ETF is the API that integrated with the traditional financial system, right?
Love that.
So they have access to an asset in a very easy plug and play way that they didn't have before.
Do you think some of their customers now have this Bitcoin allocation without knowing? It's just naturally part of something they've done to create an account for them.
Yeah.
So they don't even have to tell them. Okay. But also when I look and Bitcoin, like BlackRock is buying 10,000 Bitcoin in a day or whatever, like hundreds of millions. Do you think there's some large customers in there, like pension funds or institutions that are making part of that?
Yeah, we don't know, but I think so.
Yeah.
I definitely think so. But I think it's super, super early.
Wow.
If you look, I'll give the same example because I know Merrill and Goldman Wells because they're a place. They haven't onboarded, they haven't cleared the advisors to actually go out and promote the Bitcoin ETF to their clients. It's not there yet.
Jesus.
It will get there. And the analogy I make, again, talking about flows, right? Getting into Bitcoin in the last few bull markets, you'd have to go into Coinbase, right? Pray that Coinbase was working, and you go there and you buy your Bitcoin, and price starts to go up. And people are complaining that it's happening in this bull market. Coinbase has been like this from the beginning. Whenever you have, and I don't think it's by intention. I just think that the systems just can't handle the volume.
So I see some of the criticism that comes out, and I don't think people truly understand how difficult it is to scale systems for a massive influx when you don't know the date it's happening and the volume.
In a very short period of time. Right?
It is difficult.
So again, it's like we had this concert that was happening in Carnegie Hall, right? And everybody was inside and people wanted to get out because there's a fire and everybody's trying to get out at the same door. They can't, right? Now with the ETF, we are having a concert at Central Park. There are no walls, man. If there's a fire, everybody just gets outside very, very quickly at the same time. Instead of having 1,000 people in there, you're going to have 100,000 people. So it just become much easier for flow to get into Bitcoin. And maybe Coinbase is down, but you can go into your Fidelity account, into your Goldman account, whatever it is, and you can buy the ETF right at the same time. So when we get to the bull market and that real FOMO comes in, who knows what's going to happen? We don't know. I start to think about, people start to realize that they need to have 5%, 10% of their portfolios in Bitcoin. And if that all happens very quickly, if it's slow, it's already going to be massive. If it's very quickly, who knows what's going to happen? Because again, there aren't many people that are selling Bitcoin. We look at the price of Bitcoin, you look at the 72, 73,000 that it's in the screen. That's the marginal price of Bitcoin, right? Mm-hmm. That's the price that the next few sellers are willing to sell, maybe for a couple hundred Bitcoins, right? But as more people come in to buy in a very short period of time, you're going to eat that wall and you're going to eat the next wall and you're going to eat the next wall. If 10,000 Bitcoins need to be bought every day, means that you're eating through those walls every day. And eventually you're going to get, and you're eating through traders, short-term traders, people that still don't really understand Bitcoin. You're going to eat all of those away, and then you're going to get to the hodlers, which are all of us, right? Good luck taking the Bitcoins out of our hands, right? Our price is not, we're not even in the right order of magnitude of where we think the price of this thing should be, and that's when price can really move.
Well, hodlers are engineering ways not to sell their Bitcoin.
Yep.
That's really it. They're engineering ways to increase their stack and not sell their Bitcoin.
Which, to that point, you reminded me, you talked about where we're going in the future of financial system, right?
Yeah.
Like I saw a series of interactions in the financial systems of like new assets being born, new financial instruments being born, right? I see the whole explosion of credit default swaps from inception all the way to collapse in some cases, right? And we never, when we look back, it's always obvious. We say, okay, of course, it was obvious that, at some point you could package a lot of mortgages into these instruments, right? And it could do that. But in the beginning, it seemed like something extremely complex, and it took time for people to understand. We have no idea what the Bitcoin standard is going to bring. It's going to be completely different than everything, because it's a new asset. It's an asset that you have 24/7 transparency. It's the best collateral that you could ever wait for. And I'll tell you a fun story. So when I went back to Brazil, I started a company, lending fintech. And we did a couple of capital raises, right? And we usually raise capital for the company and also for funds that we would lend out to clients, right? So it's a lending fintech, we need to have it. So we set up a fund. We did unsecured lending to Brazilians in Brazilian real. Doesn't get riskier than this, like crazy market, right? Huge default rates. We raised capital with Goldman, right, for one of these funds. So they put $300 million in our fund, and we lend out to clients. And they loved it because, better spreads than they could get in the US, right, and all of that. So I approached some of those guys a few months ago, and they're like, listen, now I moved out of my company, right? Things are going great, but now I'm doing Bitcoin, and I'm thinking about doing a Bitcoin lending fund, right? Where we're going to use Bitcoin as collateral, and we're going to lend against that 24/7, best collateral ever. First answer that I get from the partner on that task, man, Bitcoin is too risky. We can't do it. And I'm like, you're kidding me, right? And then I show him, like, look at the returns here. Look at your risk, right? It's like, yeah, but I just can't position that in front of my investment committee, because the second that I talk about Bitcoin, they're just not going to get it. And I don't want to go there. It's just too much work for me, too much reputational risk. So that's where we are. But people don't realize that, again, this is the best asset you can have. Mm-hmm. In terms of collateral, it's the perfect, pristine collateral, right? Mm-hmm. I can execute anytime. I can see in the blockchain that it's sitting there. It's not being moved, right? If you have gold as collateral in a vault, how can I be sure that gold is still there, that, it's not being moved around, that the gold that it's sitting there, it's my gold and it's not your gold, then it's gold, right? You can't. You can actually see, you can sign a message, that proves that UTXO is yours. And if you need to liquidate, you can liquidate very, very quickly through weekends, through nights. It doesn't matter, right? You can do it automatically if you want to. And I think if people start to understand that, that would be a game changer also, because then it becomes the base layer, not only for the monetary premium, but also I think for the financial system as a whole. It's inevitable. That's going to happen. This is a much better technology than what we have right now.
Well, I feel like I'm sensing this kind of shift in the media reporting of Bitcoin. And I think it's not just during this bull market, but I think over the last year or so, but we've started to see some kind of interesting articles regarding, say, mining. We've seen articles regarding what's happening out in Africa, what's happening with, say, ERCOT, and how Bitcoin is driving kind of green energy development. So we started to see that. And then we've also seen some articles recently, and even the BBC covered it. I mean, look, they still get a lot of shit wrong. But there was a really interesting one in the FT recently. It's like, maybe the Bitcoiners were right kind of article. And I feel we're going to see a lot more of that now, because I think you're going to have more people in the positions, journalistic positions, owning Bitcoin themselves. So they're going to have done the work. And so I'm feeling the shift now. Whereas before it's like, oh, you're an idiot, you're in Bitcoin, or all the insults that we got and all the criticism. I'm feeling that. I don't know if you're feeling it. I'm sensing it.
For sure. Like 2015. First time I presented Bitcoin to bank.
You're an idiot.
I'm an idiot,
yeah,
right? I remember went to Deutsche Bank. We actually had a year-end presentation of like top topics for the next year, and this year was supposed to be. They said, "Oh, you guys have to pick something out of the box, right?" So I couldn't think about anything better than Bitcoin. It's like, this is perfect, Bitcoin.
What year was this?
2015, end of 2015 into 2016, right? So I go present Bitcoin to the investment committee, and I think the whole presentation lasted 5 minutes. Like, we can't pitch that to our clients. You're crazy. That's magic internet money, right? It's never going to happen, right? All of these things happen. And this is actually one of the reasons why I decided after a while, I tried to do that with a couple of times with my Wall Street friends, like, screw this, I'm not going to be spending time. It was also bad for me because people are just starting to look at me as like the crazy guy that's talking about Bitcoin, right? And like, screw this, I'm just going to go into Bitcoin Twitter, create this Xanon account, and that's where I'm going to hide. And, that's what I'm going to do because, these guys literally don't get it. And it has changed. It has changed significantly. I've been posting stuff on my LinkedIn about Bitcoin, and there are people proactively coming to me that I never thought would ask about Bitcoin, like CIOs of important organizations that in the past were very critics of Bitcoin, coming to me and say, yeah, no, now with the ETF, maybe I should look into this better. Now I see that they say there's a regulatory way, friendly way that I can actually put in my client's portfolio. They can also get paid on that, right? Which they couldn't before. Mm-hmm. So that has changed, and it is changing significantly. And we have just started. And you can see it on the TV as well, right? Mm-hmm. I mean, look at the number of interviews that you have about Bitcoin, and Bitcoin is on CNBC every single day,
every day. Peter Schiff's not happy about that.
No, of course not.
Gold went up $12 and they're not covering it. No, I'm feeling it, and I'm sensing. There's a few things are happening. The bull market's come early. We've all-time high before the halving for the first time.
First time.
Coming from a bear market where we went below the previous top.
Yep.
We're seeing really positive press. We're seeing smart people talk about Bitcoin in a very smart way. And I've got a feeling we might come out the end of this one where we've thought the anti-Bitcoin people are stupid, but it might start to feel a little bit like there's like an anti-Bitcoin cult. It might get a bit weird like that. And so I'm sensing it. I'm so bullish now. There was also a time like, I don't know about you, I don't know about you, Danny, but like you sometimes feel a bit embarrassed being a Bitcoiner. When people are like, what do you do? I've got a podcast. What's it about? It's about macro and economics and Bitcoin. And like you don't want to say that. But now it's like, I don't feel the embarrassment now. And so I'm just sensing this massive change, but I don't know what this change means. And I get nervous about it.
Yeah. So you mentioned a couple of things. So in the last cycle, in my mind, I don't think we've hit an all-time high yet. Not because of the reasons of inflation, inflation adjusted, all of that. I just think the last cycle was so manipulated that we don't know what the all-time high would be, right? There was a lot of fraud. And we now know that FTX was selling real Bitcoin throughout the rally, right? And then they manipulated the second top. So that was a whole manipulated, which it's fraud, right? I mean, fraud, you can price fraud. So who knows where the price would have gone, or who knows what would have happened? We don't know. My guess it would have been much higher than the 69,000 that we saw.
I agreed.
We would hit 100,000. So
I think everyone's waiting for 100,000. I think that's the number.
Yeah.
That's essentially your bull market number.
Yeah, we're all stupid human beings that have the number doesn't matter, right? I mean, it's completely arbitrary, but everybody's waiting for $100,000, like the magic number.
But I remember 1,000 after in 2017, and I know we did it previously. But I remember the 1,000. But I remember the 10,000 specifically. Like that was a big deal.
Yeah.
Didn't we shoot strght through that as well?
We did.
I can't even remember.
Yeah. And so I just think people are waiting for 100,000, then they'll be waiting for 1 million.
Yeah.
Mm-hmm.
And you asked about also the change, I think, in pension funds fundamentally. One of the things we've been saying is that it's switching, that it was the case that it was career risk for if you're a pension manager and you need to allocate capital to your clients. Up until a few years ago, if you put Bitcoin in that portfolio, even if it's a small percentage, and it blew up, it would be on you.
Yeah.
Because you were the audit. And no other manager had Bitcoin in their portfolio, right? So Peter, why did you have Bitcoin in your portfolio, right? It's switching now. And I've been saying that the fiduciary duty I think these pension fund managers, they're breaching their fiduciary duty by not actively exploring Bitcoin and seeing how it's going to be in their portfolio. Because even as I said in the beginning, with low probabilities, Bitcoin becomes a monetary asset that it can become, right? Particularly in a pension fund where you need to protect your pensioners against the debasement of their assets in the long run, they not having any Bitcoin in their portfolio yeah, 100% breaching their fiduciary duty to investors. They should have some. The same way that they bought real estate in the past, the same way that they bought gold in the past, the same way that they bought forestry or whatever it was, because they thought it was a good long-term asset to hold value. Bitcoin is not only that, but also because it's so early, there's a lot of premium that you can capture from the other assets. And we're starting to see that change. Dom Bay, you know Dom Bay, right? So Dom and I recorded an episode about, I think it was June of last year. We've been doing these series of like where we pick up a pension fund portfolio and we see what they have and we put it in an Nakamoto portfolio and say, okay, so assuming they have all these assets, right? Let's simulate a 1%, a 5% Bitcoin allocation, and let's see what it did to their portfolio. We run that analytics. We've seen fundamentals say, okay, these guys are investing in currencies, they're investing in real estate, right? So Bitcoin definitely fits in their portfolio. And we made hypothetical allocations to pension funds, last year. And the amount of money these guys, again, this is all hypothetical, what they would be making is just mind-boggling. If you look in terms of billions that they could actually be making to their pensioners, right?
Do we know if any pensions are allocating yet?
Yeah, some smaller ones, right? Dom has allocated to, I think, his firefighters association. So there's smaller ones they're doing. I think the big ones are with the ETF. They're definitely going to do it.
Okay,
100%. They're going to
need to do it.
Yeah. Yeah, exactly.
Could be what saves their pensions.
Yeah.
There's been a lot of talk regarding Social Security on Twitter this week. Matt Walsh. What is a woman? Is it Matt Walsh?
That's Matt Walsh, yeah.
He's been talking about it as well. A lot of people have been talking about it. I don't have a pension. Well, Bitcoin, my Bitcoin's my pension.
Your pension. Yeah.
I don't have a pension.
Yeah.
It was just never worth it because I started too late.
Pensions is another thing that comes from the Keynesian thinking that you need to have, your daddy, the government, to actually give you support after you retire. Well, how about we all just save the fruit of our labor in something that, can actually perform for the rest of our lives? And guess what? We don't need to invest in a pension. Our pension doesn't need to be doing anything because we're not getting robbed every single day of our assets, right? We hold it in an asset that is actually going to appreciate in the long term. I think that would be a novel idea for us to consider instead of just relying on the government to give us a pension, right? At the end of the day.
What's Michael Saylor up to?
I don't know, man.
He seems to have found the ultimate cheat code.
Yeah.
To life. He could end up becoming one of the
richest man in the world.
One of the richest men in the world. The richest man in the world. Just through financial engineering. It's like a reverse Ponzi. Have you studied much of this? Have you looked at it?
Yeah, as much as everybody else, right? And I think it's very simple. Michael has discovered Bitcoin, and he sees Bitcoin as us. He sees us the best monetary asset in the long term. He said, it's like, I don't completely agree. He said, this is the, it's like digital energy that you can store, right? I think it's more like a monetary fuel cell that you store. But anyway, he absolutely woke up to that, right? And then on the other side, he has access to the printing machine through the capital markets, right? So he's doing the right thing, saying, I have a printing machine here that I can get, dollars in as much as I pretty much want. I'll put in this thing that is going up in value. As it goes up in value, I actually have more collateral. I can go more and get more cash out of the machine. And that's what he's been doing. And I think he's right.
But does at any point he have to start paying back these loans?
Yeah, but he can roll the loans, your long dated. I mean, he can issue more stock. There's so many different things that he can do it until then. At some point, he may just unwind the whole thing and say, I'm just going to give Bitcoin to all the shareholders, right? And pay everybody back, and you receive Bitcoin, and that's it, and he walks away. I don't know. I have no idea what goes through his mind, but it's fascinating. I think it's the best form of speculative attack in the dollar we've ever seen.
It's incredible.
He won't say that, but...
No, of course he won't. But it is incredible to watch it, and what it's done for the MicroStrategy share price.
Yeah, but it's a level of conviction that you don't get. And the fact that he controls the company really helps. So another story. On my company in Brazil, when we did the Series D, we raised capital with SoftBank. So I went back to them and I said, okay, I have a proposition to you. So instead of you doing, X with us, you're going to do X plus 5%, and we're going to put Bitcoin in our balance sheet. because I think that's a very good sign, and it's a great asset for us to hold long term. We're going to be the first Brazilian company to have at that time to have Bitcoin in the balance sheet, right? First reaction was, you're crazy, why'd you do that? I got eventually to somebody that bought into the idea, right? Again, I wasn't the only shareholder, right? I was founder and CFO of the company, so I had to convince the other partners, which, by the way, couldn't get it as well, right? And then eventually Softbank said, okay, we're fine, we're gonna do it. But I want you to talk to this company that we've invested, that it's the Coinbase, similar in Brazil, because they can do the execution for you guys. So I go to them eventually. I say, okay, we're looking to buy Bitcoin. We're going to put Bitcoin in the balance sheet. They're like, no, you're not going to do that. We're going to issue a token for you. You're going to do a token for the company. And then I just like, man, and this at the middle of doing a capital raise for the company, like this just became a distraction. And I'm a convict Bitcoiner. I couldn't do it, right? Because again, I had to jump through all these hoops to get it done. I think what Saylor brings is to show that this is possible to be done. And he actually wrote a guidebook on, for other CEOs to put Bitcoin in their balance sheet.
But no one else has really done what he's done.
Because I don't think that, they need to jump through all these obstacles. They don't control their own company, right? They need to go through boards. Boards are very hard to deal with most of the times. But I think, again, eventually, it's just like the pensions. This is going to flip. Every company is going to have Bitcoin in their balance sheet. If you're Apple, right? I don't understand why Apple doesn't have Bitcoin in their balance sheet. I really can't understand.
What, they sound like 250 billion or something?
Yeah, they have massive cash position. They buy a lot of companies, so they invest in. Just purely to get access to a digital asset, they should have some in their portfolio, in their balance sheet, right? It doesn't make any sense for me.
Yeah. Do you think Coinbase are going to do it? Did you see the?
I saw that. Was it $1 billion?
$1 billion, yeah.
Convertible, was it a convertible note, 10 year?
So, yeah. I mean, surely that's what they're going to do. I can't see. Well, I don't
think
know.
so? I don't know.
You don't think so?
Well, do you think they need cash flow?
Brian Armstrong doesn't even talk about Bitcoin. I mean, he's been talking a little bit more lately.
He has been, and I wonder if because of the ETFs and all of them using them for custody, etc.
And Michael Saylor, he's looking at MicroStrategy like maybe this is a strategy that we should be pursuing. Yeah, maybe, but I don't know. It goes against everything. That it would be a huge shift if that happens. It would be a massive positive signal.
But I wonder if
that's capitulation right there.
Yeah, well, but there must be a few people now looking at Saylor and going, "Hold on a second, he's found this cheat code. Can I do the same?" And every one of them can do exactly the same.
Yeah. I mean, right now they've got less than 10,000 Bitcoin on their balance sheet, which for a company that's been around since I don't know when, that's crazy.
Crazy.
Yeah. Who's above them?
Tesla.
How many have they got now?
They've only got a few hundred more, so they're under 10,000 too. Marathon, I got 15,000, and then MicroStrategy.
Wow. Yeah. I mean,
this is one of the main reasons why we got into mining, is to also accumulate Bitcoin, right? Mm-hmm. I mean, it's we want to have Bitcoin in our balance sheet, and that's I think the best way to do it.
Yeah. So explain to me the mining thing and where this fits into it, because at first, when I heard like Swan would get into it, I was a bit surprised. But then when I started to think about the institutional side of Swan, and then start to think about capital allocation, like for myself as a Bitcoiner, I'm like, if I'm ever going to invest money, where am I going to invest it? So I have emotional investments, which are like little businesses I want in my town of Bedford, and I don't care if I liquidate some Bitcoin because I just want to grow my town. So that's like an emotional investment I'm happy to make. But when I then think about other investments, I'm thinking about investing sats in a business. Is the business equity going to outperform just holding the asset? So I think about that a lot. But mining's an interesting one because miners are paid in the unit of account of Bitcoin. And so that one starts to make sense for me. And so I start to think about businesses that will pay in the unit of account. And maybe many of them aren't even there yet. But so explain to me the Swan move on this.
Yeah, I'll start with, you're starting the right place, which is Swan Institutional, actually. It's where this all started. It's super funny because Corey disclosed the amount of revenues that we were having. I think it was late
Triggered everybody. And all kinds of wild speculations, right? How is you guys doing this? They made all the calculation of like how much Bitcoin we need to be selling with the 1% fee, which again doesn't make any sense. Swan is full of shit.
no one, at least not where I saw, no one guessed that we were mining. And it's the only obvious answer because, of course, now we look back, it's like super obvious, right?
Someone did, actually. I'm not going to say who.
Really?
Yeah, someone did. So privately, somebody said to me
that we were mining.
Yeah, and I didn't know, but I had an indication, and I wasn't willing to discuss any of my like clients or sponsors. But like one person did, they said, I know what's happening, they're mining. I was like,
they probably knew something because, again, we try to be very...
no, I think they did. I think it's somebody who looked rationally,
got to the conclusion.
Yeah, got to the conclusion because it was the only rational answer because otherwise you'll be totally found out. If it was a lie, you'd be found out.
Yeah.
And so they did the rational conclusion. It's the only answer. Where can you deploy that much capital that quickly for those returns?
And have revenues
exactly.
this quickly, right? So it's the only thing. But how this all started, it actually started a while back. Since I joined Swan, we've been thinking about, okay, and even before, Corey has been thinking this for a long time. It's like, how do we, if we want to be long-term, we want to be a Bitcoin-only company, right? And we want to be around, what else do we need to do, right? And part of that came from our planning, but a lot of it came from our clients, right? So I think one of the biggest advantages that we've had for building the brand and being around is that we talk to people from all kinds of different fronts, right? Investors, people that have companies. And it very quickly became clear to us that we had two different sides here that we should start thinking about how to put together. One was on the opportunity side. So a lot of companies coming to us, hardware companies in the Bitcoin mining space, mining facilities, exchanges, all software, all kinds of different things in Bitcoin, people coming to us. And then we also had investors that are stacking sats, buying Bitcoin with us. And just like you, thinking, okay, so what's going to happen in a Bitcoin standard, right? Can we get things that are going to have ROIs that are better than Bitcoin? Or at least they're going to diversify that maybe, in periods where Bitcoin is not going up, but it's still Bitcoin related and these things can still perform, right? That I should be looking at. I said, okay, and my investment banking hat comes right into it. It's like, this is investment banking. This is the core of investment banking, right? You have assets that want liquidity, that wants to go somewhere, and you have these opportunities. So we started looking at a couple of different opportunities, right? And at the time, we didn't know that it would become Swan Institutional, but the first opportunity we looked at was a mining opportunity. So it's a mining company in Australia that we were looking to invest purely as an investment, passive investment, going there, putting capital, helping them raise their Series A, right? And by looking and doing due diligence on the company, a few things were super interesting when we started looking. The first one, this was back, as I said, like June of last year. So the price of the ASICs were like at historical low. So ASICs are priced in dollar per terahash, right? So the price that we were talking back then for like an S19 J Pro, which are typical machines, were like in the low teens, right? Very, very low teens. And if you look at chart, these were machines that were being priced at like 100 plus 6-9 months before that, right? So again, the same way I think that, Bitcoin triggered me when I saw that it dropped from 1,000 to 300. When I look at that just as a pure trade, it really caught my attention, right? The second one was there were a lot of hosts out there that were suffering because Celsius went under, all these mining companies went under that had machines, just left, and they had all this space, power available, right? They needed people to go in there and just get that. And so we looked at these things and said, okay, so we'll be making an investment in the Australian company, but maybe there's something else we should be doing here, right? Maybe we should be thinking. And Corey has been at Riot Board with Ian as well. So mining was something that we always looked very, very closely and we had a lot of interest in. Pacific Bitcoin last year, we had a mining day. We were ready going for that, but when we started thinking about having the mining day, we weren't even thinking about mining. And this all happened like super, super fast. So I thought that raising the capital was going to be extremely challenging. And it's never easy, but it wasn't hard. We raised the capital, and then with that, it's okay, so now we have to think about the mining strategy. What are we going to do? We're just going to buy the machines and wait for prices to go up? Yeah, maybe we'll do that. Let's order some machines, right? So we ordered some machines, and then as the machines came in, like, just started making, I love, as you can figure out, I love making all kinds of simulation spreadsheets, models, right? So I create models, I'm looking at it like, man, if we just deploy these machines, even if it's not really cheap electricity, we can start making a lot of money, right? So we started deploying some machines, and then the investors saw that, cash flows are coming in. We give for the investors, we give transparency on everything. So we have a dashboard, our mining dashboard, which is the one we use to control the sites, that they have access to the same dashboard that we have. So, which again, there are good things and bad things about that. The good part is that they saw the cash flow coming. They saw the Bitcoin addresses, right? And again, it's the beauty of Bitcoin, right? They can actually literally track the address, see what Bitcoins, how much is being mined. And that got them interested as well. That got other investors interested as well. And that started to grow. So it started as a small deployment in the middle of the year, and we just broke 7 exahashes. So we're growing significantly fast. I think it's probably, hard to measure this, but I think it's probably the fastest deployment of hash rate that we've ever seen in Bitcoin history. It's not a great comparison because, again, as time moves, it's easier to do that. We were at a good time because there's a lot of facilities available, but we took the opportunity.
So you were taking facilities that were distressed assets?
They weren't distressed assets, but the host really needed to get somebody. In some of these cases, they were distressed, but
because deploying I've been to, say, Riot's facility, and I've seen them building. I mean, it's almost like a production line. You have one building that's completely done and full of ASICs and hashing. You got the next building that like you go in and they're still just doing the wiring, and the next one's and it's like this production line of buildings that are basically ASIC production. Bitcoin production facilities, right? So these take time.
They do.
So like I still can't get my head around how you deployed it so quickly.
So the difference between what Riot does and what we did, something that is similar to what Marathon did. So we don't own our infrastructure right now. So there are some companies out there that all they do is build infrastructure, right? So they had access to cheap power, right? So they built a storage facility at the side of cheap power, and Bitcoin miners would come in and would rent these facilities, right? And all of these guys that did that, and these are usually in smaller scale, but there's some large ones, right? Most of them were suffering because there was massive demand in the bull market. All of them overbuilt, right? There's a lot of excess capacity. And for them, it's bad because some of these, they would pay long-term contracts for energy. They need to have somebody there hashing, right? And for most of these, we got with them and said, okay, so here's what we're going to do. We're going to get low. So let's say you're making the numbers up. Let's say you're getting 5 cents energy. You're going to give us the 5 cents energy. So it's passed through, but we're going to share some of the upside. So when we mine 1 Bitcoin, we're going to give, I'm making this up, and we're going to give you 0.1 Bitcoin for you, right?
So you de-risk both sides.
So you de-risk both sides.
Yeah.
Exactly.
Smart.
And you align the interest so that you make sure that if they have uptime, it's great for them. They don't want to see their facilities down, right? So they're 100% interested in make sure that most of the ASICs that we have, they're hashing as efficiently as much as they can, because otherwise they won't get paid, right? So this was also another thing that actually really helped us a lot to deploy. So again, we were lucky in a sense that we're very lucky in a sense that I think it was the right time. If you look at a lot of the miners that struggled, that went under, they went under for a series of reasons. One, either they bought machines that were really expensive, like those machines that I mentioned at $100. Somebody bought them at $100.
Bro, right? I bought 5 SJ Pros for $10,000 each, and they ain't worth shit now.
Yeah, exactly. Or they got bad leverage, right? They got into a massive amount of debt that they are going to need to pay at high interest rates,
Yeah.
So there's no magic here. This is another machine. Mining is also a speculative attack on the dollar.
Yeah,
right?
of course.
We're raising capital, we're getting the capital. People don't like to say this, right? But that's what it is. You're getting fiat, right? And you're transforming fiat in Bitcoin. You may lose money in the meantime, right? But that's what you're doing. If you pay too much for the cost of capital, you're going to go under. If you pay too much for the machines, you're going to go under. If you pay too much for energy, you're going to go under, right? So you have to manage all of these things appropriately. Luckily, at the time that we deployed this, again, it's a little bit of luck, but also not. Like as we were doing the due diligence on this company, these were the things that really got us interest. Like, cost of capital, we got very cheap cost of capital. The same thing that we align interests with the host, we did with the investor. We said, listen, we're going to get that with you. That pays no interest. But what we're going to do is, as we mine more Bitcoin, first we're going to pay you back. and then we're going to share the economics on the upside, right? So it's the same thing. And
So you just align the interests of everyone around
that's
Bitcoin.
what Bitcoiners do,
Yeah.
right? It's like that. Why Bitcoin works, because there's alignment of interest, across different parties, right? Node runners, miners, the interest is aligned for everybody. So we try to do the same thing here. So that's how mining took off, and we deployed a set 7 exahashes. We have machines to go to 8.8, and we just bought more machines to get us significantly higher than that. So yeah,
that will get you up to be like a top 3 miner, top 2?
top 5. We're
top 5.
Yeah, close to top 5. We're very close to Cypher, TerraWolf, and those guys.
Is this hash rate in the US, or is it public knowledge where it is?
Yeah, so most of it's in the US. We haven't disclosed exactly what they are, but they're mostly in the US. We have deployed in Norway, so we have a site in Norway as well. And we are looking at other countries. The worst, I think the bad part is finding places where, like for example, Ethiopia. We're looking at Ethiopia.
Yep.
I think there are opportunities there, very cheap energy. I'm not still 100% comfortable with deploying there because, I don't know where security, where the miners are going to be. Mm-hmm. So eventually I think we are going to get there, and we can deploy probably machine, like, a smaller scale, machines that are less efficient because the energy is super cheap, right? And it still makes sense. But diversification of hash rate, it's super, super important. Something that is, in our mind. We want to do more. I'm looking at South America. So there are other places.
Did you see John Carvalho's back and forth with Pierre on this yesterday?
No, I didn't.
So Pierre shared the, this like part of the whatever fucking bill, this proposed 30% tax.
Thing.
Yeah.
Oh, okay.
The 30% tax on energy for Bitcoin miners. And John Carvalho replied something along the lines, and if I get it wrong, apologies, John, but something along the lines of, this will be good for the distribution of hash rate, as miners will have to leave America.
This happened in China, right?
Yeah.
2021, China banned mining, and what happened? A lot of it came to the US and Russia and other places, right?
It does feel like there's a hell of a lot of hash rate in the US. Like a hell of a lot of hash rate.
In the US?
Yeah.
Absolutely.
It feels like there's a lot here.
Yeah, it is. It's because the energy market is, very good. Like, what they have in Texas. And I think that's a model that it's all game theory at the end of the day. So that model is going to be replicated in other places. We've seen states that, have kicked miners out. They're like second guessing now. Like, yeah, that was good revenue that, went away. Maybe we should rethink about it. And these things take time, but they eventually happen, right?
Well, I love this game theory side of Bitcoin. So we had it announced this week. Didn't the FCA announce in the UK? Because basically people are complaining that US investors have got this advantage because they can access the ETFs. And like UK investors are saying, well, this is fucking bullshit. And I think the FCA have said...
They're going to walk back some of the rules.
Yeah. Can you see if you can find anything on that? I'm pretty sure that's what they said.
Well, they recently brought in that new regulation where you have to pass a questionnaire to be able to buy Bitcoin. You've experienced it.
I filled it in.
Yeah,
it was a really interesting questionnaire because it had the basics like, how much do you earn and how much savings, where you got it. But then it asks you some questions to like prove your understanding of Bitcoin. Yeah, I can't even remember the questions, but I'll come up with a kind of question. It'd be like,
that's crazy.
I don't know how many. What's the total supply of Bitcoin? Like, and it'll be a multiple choice. One of them will be 21 million. I'm like, that's not the question, but it'll be something like that. There's 3 or 4 questions. But then somebody came to me and they said, "How do I fill this in?" And I was like, "Well, if you fill it in honestly, they're not going to let you buy Bitcoin. So just fucking lie." Because fuck you. I know.
You shouldn't say that.
Yeah, but
even if that's true, you shouldn't say that on the podcast.
Why not?
Well, because I'm sure it's like, I don't know.
What trouble? I can get in trouble with saying just lie. They're the one lying.
True. I don't know.
No, but I think it's bullshit. Like, go fuck yourself. Yeah. Like, who are you? Like,
I'll tell you what's going to happen.
Well, can I tell you the thing that pisses me off about this is like, they will not allow you to invest in Bitcoin because they see it as financial risk. But I can download 20 betting apps and start gambling on fucking horses or the next point in table tennis or whatever bullshit. So like, go fuck yourself. Yeah, I will lie and fucking sue me. Fuck off. No, I do. Fuck off.
The beauty of all of this, again, it all turns to game theory.
Yeah.
So there are going to be governments that are going to try to do all kinds of crazy things, and people are just going to leave. They're going to go somewhere else. They're going to go to El Salvador. They're going to go to the US. They're going to go eventually, I don't know, somewhere else, right? There's always going to be a country that it's going to be friendly to Bitcoin because it pays to be friendly to Bitcoin, right? They're going to get a lot of revenue. They're going to get a lot of Bitcoiners. And, guess what? The ticket price is actually going up because Bitcoiners are becoming wealthier and they are going to have other options to go at some point, right? So, and I think it's natural. You go for a stage where governments are going to try to clamp on it and tax it, and they're not going to get a lot of tax revenues out of this because people are just going to do all kinds. They're going to put it in a trust, or they're going to do. If people have money, can always get around, tax legislation. The poor are the ones that get screwed, right? Always, right? So,
isn't it kind of mind blowing when you think about it that you create this uncensorable money that has this very, very simple monetary policy where you know the total supply and you know the issuance rate. So the monetary policy is fixed limit 21 million with an issuance of approximately every 10 minutes with a block, which halves every 4 years. That's it. That's the monetary policy.
Yep.
It's and you think of something like the Fed or the Bank of England and all their bullshit. I don't know. Did you see the ECB announcements today?
No.
Look up Christian. What's that fucking woman's name? Christian Lagarde. Right. Go to Twitter. And tell me if you can even understand what she says. Right, go to it. Yeah, you got it. Right, find her Twitter.
Announces changing to the operational framework.
Yeah, but find her Twitter.
Okay.
Yeah, go to her Twitter and then...
The changes to our operational framework acknowledge significant changes in the financial system and monetary policy in recent years. The framework will ensure that the policy implementation stays effective, robust, flexible, and efficient in the future.
What the fuck's that? What does that even mean?
I don't know.
Do you think that basically said, we're fucked, so we're going to do some other things to try and be less fucked, but we're still fucked?
I mean, I'd want to read it, but I have no idea what it means. Yeah.
So you see all that and you're like, what are you going on about, you fucking lying thief? Like, what are you going on about?
Isn't it clear that, having monetary policy written in code, that it's not subject to a couple of human beings somewhere making decisions that who knows is going to be based on what, on interest or even stupidity, whatever it is, right? Here, you know exactly what's going to be.
Hey, you said earlier, like, Bitcoin's ethical. I think of it a different way because I don't want to apply ethics to it. I actually just think it's fair. I know the rules. You know the rules. You know the rules. None of us can cheat Bitcoin.
Nope.
However we try, we can try and double spend. We can't. We just can't cheat it. We know the rules. This will be the total supply forever by 2140, and we know the issuance rate. And so, because we know the rules, we have to play by those rules, and everyone adjusts to it.
Yep.
But what these central fucking fuck faces, sorry, I'm swearing a lot of them. I'm going to get a bunch of emails. Can you stop swearing? My kids are listening. But what these central fuck faces do is they change all these different levers and they change their interest rates and print some money and blah, blah, blah. For whatever reason they choose. I actually think we are in that phase of looting the system now. Mm-hmm. I think Eric Voorhees tweeted about that the other day. And then we all have to adjust to their bullshit.
Yep.
And still get fucked.
Yep.
So I just think, isn't it amazing that we're literally shifting the economic reality of the world with two rules? Like a known issuance amount and a known issuance rate. And that is it.
Yeah, exactly.
Adjust yourself for that.
Yeah. And the beauty of all of this, like the inflation rate that people compare the inflation rate in Bitcoin with the inflation rate of, central banks, they're not even comparable. Because the inflation rate in Bitcoin, I know exactly what's going to be. I know where, it's 625 Bitcoin is going to go to 308, and it's 100% predictable. So knowing that it's predictable, I can adjust, as you said, to it, right? So economic participants can adjust to that schedule, can adjust to that inflation because they know what's going to be coming up. I don't know if the Fed inflation is going to be 2, it's going to be 4, it's going to be 7. And Milton Friedman said that unexpected inflation is the one that really creates problems in prices because economic actors don't know what's going to happen. So if you have a business and, you've seen that your cost of everything that you're going, is going up 4%, you may need to anticipate that and say, okay, if it went up 4% every month, I'm just going to jack up my prices by 4 as well, because otherwise, who knows what's going to happen. So there's this concept of inflation inertia, which is inflation feeds more inflation, which feeds more inflation. That's what leads to hyperinflation, right?
Yeah, and there's a bigger problem with that is like, I'm just going to jack up my prices. But if you're in a competitive business, I own a bar, okay? That's a competitive business.
Yeah.
I want to jack up my prices because my prices have gone up. But it's a game of chicken against the other bars.
Exactly.
But actually, you don't want to win on the who can blink first on inflation. You want to win on service.
Yep.
You want to win on the service that you're supplying to people. It's just, it does my nothing.
Yeah. And price is information, right? So as long as you start losing the concept of price, you don't know what's going to happen. You don't know if it's going up, going down, and there's this variable that it's central banks printing. You just lose information. You don't know that if the price that your competitors is charging is right or wrong, because you don't know if maybe they got a deal where they bought stock for 1 year for the old price, and because of that they can keep prices lower, right? You just don't know. You lose the price reference, right? And that's one of the biggest issues, again, nobody talks about in the economy today, right? And Bitcoin fixes that for sure.
All right. Well, listen, look, I could keep talking to try and win this bet, but I think I've lost it.
It's about time I won one.
Yeah, it's about time you won one. Where are we? 224. Yeah, we're not going to go $800. Just the final thing I was going to ask you, there'll be two final things. First one is, if somebody's listening, they still haven't got any Bitcoin, and they're like, what do I do? Where do I start? Do I put a lump in? Do I put all my savings in? Do I allocate a certain amount every month out of my way? Like, where the fuck do I start? Like, what would you say to them?
Yeah, buy always and buy small. That's what I always tell everybody, right? If you don't have any, zero is the wrong answer. So you're already at the wrong place. So buy some, right? And always buy with a time horizon of 4 years plus. So think that whatever you're buying, you're not going to touch for at least 4 years. If there's something, you're going to need capital to pay for a kid's college or something else, don't put it in Bitcoin, because, you may get out of a great time, you get out of a bad time, it's volatility. It's, as we discussed, it's a feature, not a bug. It's going to be here. It's a beautiful thing that it's here, because that means that we are early. The more volatility, the earlier we are in the assets, right?
Yeah.
So embrace that. And that means get to an asset size that would accommodate a long-term period, and you're gonna be okay with it. And always buy. You have a paycheck. Separate. I don't know, piece of that, 5%, 10%, whatever it is. So every month you're going to be buying a little bit of Bitcoin. It's not the best strategy. The best strategy is to lump sum in, but putting psychology into this and making sure that people. And it's a learning process also. So you're going to buy a little bit of Bitcoin. You're not going to care too much. But then you buy a little bit more, like, maybe I should read a little bit about this. And you go log into Bitcoin Twitter, right? And just start listening to what Bitcoin did. And then they go to the next phase, and then they read a little bit more, and they get more comfortable, right? So, and as you get more comfortable, then you can sustain even more volatility. And eventually you get to Bitcoin standard, where you start pricing everything in Bitcoin, right?
Full degen.
Yeah, exactly. Full degen.
Eating steak, sunning your balls. All right, Danny, listen, you've
won the bet.
You've won the bet. 100K sats to you.
Perfect.
That's how much a degen we are. We should bet on everything. Honestly, we bet on crossing the road. Listen, where do you want to send people?
You should go to swan.com, see everything that we're doing. Have my Twitter. It's Alpha Zeta with Alpha A Zeta, 2 A's. People can find me. I'm around. I've been on Twitter for a while. And
yeah. Are we hanging out tonight? Are we getting dinner?
We are. I think we have dinner tonight.
Amazing.
Yeah, awesome.
Well, listen, thanks for coming on. Thanks for winning the bet, Danny. Thanks everyone for listening. I really enjoyed this.
Thanks
for the sats, bro. Laters.